And hello, everyone, and welcome along to this live webinar. And today, with a special guest, our main guest, I think, in webinars, Jamie York, the head of Aspire Property Group, a property investor, mentor, a great guy. So I will let you to introduce yourself, Jamie, and then I will describe the agenda for today, and we can start.
Sounds great. So, first of all, good to be here. Thanks for having me on Lendlord and Avi. For those that don't know, I've been working with Lendlord now for a few years. Few years? Yeah, a few years now. And it's been absolutely incredible to see the growth it really has. And the reason why I started getting involved with Lendlord is, well, number one, I love the idea of prop tech anyway. And I started to think about what I would put together if I had any of those sort of capabilities, thinking I was a genius at the ideas. And then it turns out that Lendlord already exists and does everything that I wanted. So it's really cool to be a part of it. For those that don't have any idea of who I am, so my name is Jamie. I've been in property for about a decade now, and I tend to focus on helping people gain entry to the market and take advantage of the environment that we're in to make a load of money through property, using methods that I've done over the last decade. So, been going for about a decade now. I started 33 grand in debt with credit cards, payment plans, personal loans, all of that, and we've now got a 25 million pound buy-to-let portfolio, or a majority buy-to-lets. We loan out about 5 million a year to our mentees, to help them with their development projects. And yeah, that's us in a wrap, really. I just enjoy helping other people replicate what we do to try and help them in their financial independence.
Yeah, thanks, Jamie. And yeah, now our partnerships goes, a few years back, and we always love to work with you. I think your education and training, especially your videos on YouTube and the things that you do, actually help landlords and property investors to get started, but also to grow the portfolios. And this is aligned with our mission at Landlord to provide digital tools to help landlords or property investors to run and grow their property businesses. Before we start, if you watch this webinar on our YouTube channel, feel free to subscribe to get more relevant content. And the agenda for today is mainly to speak first about the market. I already saw one question in the chat, and I think there are many questions. And landlords are wondering what's going on, I believe, and with this current situation in the UK market with the government, the budget that is now delayed, I think, to the end of November, the rates that dropped a bit, but now I think the last one was, I think for today, that remains the same. Reforms for landlords, the renters' right reforms, perhaps some taxation. So I think it's really important to understand. I think like for me, it's also would be helpful to hear your view on how you see the market moving forward toward the end of 2025 and in 2026. And then we will discuss about some strategies and how you can utilize technology and digital tools with Landlord, while you, Jamie, will give you your insights about sourcing, deal analysis, and management of properties. So before we start, we are running, as usual, a promotion to our premium plan. So you can get 50% off using the code that I just put on the chat. Click on this link. I will show it after that how you can actually activate it. And then on the coupon field, enter the value Jamie09 for September, and then click apply. And then you can get both plans. We have now also a premium plus plan, everything in 50% off. So Jamie, let's start with the market. I think there's so many things going on. I think there is uncertainty, mainly for landlords. What is your take on that? How do you see the things and how you see it, moving forward?
Cool. So, yeah, first of all, fear is it's a very, very interesting thing in the market. So the first thing is, on a fundamentals level, do buy-to-lets make sense? And I know this is a very broad stroke, but the answer is yes, and it will always be yes. And I want to explain why though, because a lot of people are like, oh yeah, like the answer is always yes. That's always going to be the answer you give. Yes, because the answer is always yes. So we go back to basic fundamentals. Can anyone believe there will be a time in our lifetime, and who knows what life is going to be like in 10,000 years, but in our lifetime, where somebody doesn't want a roof over their head? And can you ever imagine in the UK where people would not be willing to pay for a roof to be over their head? And the answer is obviously that will always be the case. And so then you do have the fundamentals of what goes on. And I just want to bring, there's so many different fundamentals in economics, but if you just understand supply and demand, is the really easy way. So as of today, there is a 1.6 million unit housing shortage in the UK. Chris has said it incredibly well there. We live on an island with limited housing supply. Yeah. So we currently build on about 3% of the land in the UK, which is kind of crazy. We're legally allowed to build on about 6% of the land. So we can build on more. But the problem with that is the cost of infrastructure, right? Technically, I can build in the countryside in the middle of nowhere, but what about water? What about drainage? What about electrics? What about gas? What about everything else that comes with it? So we build on about 3%. So as of today, we have a unit housing shortage of 1.6 million. Now, everyone's got their opinion on immigration, and I'm not here to talk about the moral side of immigration, but just logical. If we have immigration to the level that we have currently got, can everyone agree it's too much immigration for us to keep up with logistically? I'm not talking about the human life and why people want to get out of their country. I'm talking about logically, there are too many people for the housing we have available. So everyone in the chat, just so I can check in to make sure everyone's on. When there is that much demand and that much money getting thrown around, what do you think happens to prices when supply can't keep up? Do you reckon they go up or down? Up, right? Obviously, they go up. Now, think about supply and demand. Most of the time, when people think of supply and demand, they only think of the demand side of things. But let's just think about the supply side of things for a second. So, they're trying to make it easier for people to develop. But the reality is the cost of labor, the cost of bricks, the cost of wood is around 60% higher than it was 5 years ago. And so, if it is costing somebody more to build property and therefore increase the supply of literal property in the UK, what do you think has to happen in order for them to do that? Prices need to go up because they have to make their profit margin. But factually, actually, there's only two outcomes. Either the overall market can cope with the necessary increase in prices or it can't. And if it can, what happens? Then people build more. Great, but that's only to facilitate the demand that's already there. Option number two is they can't build more because they can't do it cost effective enough and the market doesn't allow for the prices they need. Therefore, demand continues to go up. Supply stops increasing the level that we need, which it already is, by the way, and therefore prices go up. If I look at the final one, because I've seen a few people, what about the compliance and the renters reform? First of all, I've not seen anything in the renters reform that puts me off personally as a landlord, but you are absolutely right. It will be the straw that broke the camel's back for a lot of landlords, as was Section 24 when it came out, which is a tax that made us all go from personal ownership to business ownership. Now, for us, looking to get rocking and rolling and into property, that's brilliant. But for the 75-year-old that bought the properties in the heyday, if you like, which by the way, the heyday is always 10, 20 years ago, as it will be for us when we're 75, they then exit the market. And when somebody exits the buy to let market, a majority of them are doing what? They kick their tenants out, unfortunately, and then they sell on the open market, which is doing what? It is restricting the rentals in the area. And what has happened to rents? Can anyone tell me what's happened to rents over the last 5 years? Have they gone up or down? Gone up about 40%. And there we go. So you can see where this is going, and everything you can come up with. A great example is somebody just said there, the government will put rent caps in. So let's play rent caps. Where have they done that? Two places in in the Western world, gone into Scotland. And what's happened to rent since they put rent caps? Kind of hard to believe. They have skyrocketed like to a crazy level because nobody then wants to leave their property because the only time you can increase the rent if there's rent caps is when somebody leaves and you can increase it to market value. So loads of tenants don't leave, and then the ones that do come available. And the other famous area is San Francisco that had a 600% rental increase over the 5 year period that they introduced it. So, do I believe in buy to lets? I think you know my answer. Um, there's always opportunity. The question you shouldn't ask is, do buy to let still work? It's how do I approach buy to lets in the current market? That's the question and the game that you play. It's not does it work, it's how am I going to play the game this year, now knowing that I've now gone into a new level of the game. That's it.
And what is the answer for that? Like what strategies you think, landlords should pick now, if they still want to grow their portfolios, which I understand from, I think your point makes sense for the long term, nothing happened.
Yeah.
Question what to do in the short term. I think this is the main question.
So I think first of all, you need to know what buy to let is not. Buy to let is not a strategy that you're going to quit your job on from the cash flow next month. And a lot of gurus out there sell like quit your job, just buy some buy to lets and quit. It's like that's a lot of buy to lets. That's a lot of £200 a month to quit your job. So there's two ways of approaching it. Is you can do a BRR, which is buy, refurbish, refinance. Now you need to be really careful with that. So I've actually just agreed one like 20 minutes before jumping on here, which is pretty cool. So we can go through some numbers on this deal if you like.
Yeah, we'll do like an example soon, like shortly. Yeah.
Yeah, perfect. So I can go through that. So that's a great opportunity. The risk, of course, for people is making sure they're confident on the end values. So when you've had what you've had going on, there are definitely, it's a softer market. And so the great opportunity of that is you can get some incredible deals. The other option if you're really good at marketing and really good at negotiation, which I'm not saying is everyone, but if you've got a good marketing technique and good scripting, which we go through with delegates, is you can do straight buy to lets. And if you're really obsessed with getting your money out and stuff like that, then you negotiate 25% discount. And I know that a load of people, if you're new to the market, you're going, no way could you do that. Yes, you can. We do it regularly every single month. And I'm not saying it's going to come up constantly, by the way, but we just agreed one about 4 weeks ago. And to be fair, we didn't get a 25% discount, it's 24% discount. And there's nothing needed. And so, what you do with that is you need to find, and this is something that I love Lendlord for, is a bridge to let. Okay, you need a bridge to let product. So what you do is don't use your own money, spend Avi's money and Lendlord's money, and might as well use them. And they bridge you the money for the purchase, and then you refinance at the open market value on the mortgage product. So you bridge it for around 5-6 months, refinance onto the mortgage products. So that's the way to do it.
Yeah, and so I think perhaps we can jump on and like actually to show the numbers, and then we can discuss a specific deal. So let me share the screen, and I want also to show people that want to upgrade how they can activate the coupon code. Can you see the screen?
Yep.
All right. So you can click on the link that I will put in the chat that I put, like just scroll up, then go to your settings page from the right top menu, click on the avatar icon, then click settings, then on the plan details, if you're on the basic plan, click upgrade, and then on the coupon field, put Jamie09 and click apply coupon, and you will get both plans for the first year 50% off for the premium, which should be enough. I will show the features on the premium plan. You can get it for 49.5 pounds instead of 99 for the entire first year. People that are already on premium, just message us on the chat, just on the privately to the host and panelist, your email address, and we can apply the coupon code for your renewal, or if you want to upgrade to Premium Plus. What you get on the Premium plan, so first, the sourcing tabs. You can see the full address on each property listing. You can add properties to your watch list. You can apply, or you can contact the agent as well. You can apply sourcing alerts and get notifications on price decrease, price increase. And also you can actually create your own search criteria by adding an address, radius from this address, price range, and select property types that you're interested in. And the platform will notify you via email or mobile push-up anytime that identifies new opportunity for you. This is on the sourcing pages. You can also run property value estimations and rental value estimations for any property. On the deal analyzer, you can use our new Chrome extension. And I don't know if Saril, if you are here, if you can put the Chrome extension on the chat, how you can download it. But basically, let's say that you source properties on Rightmove, Zoopla on the market. You can use the sourcing tabs of Lendlord, but if you do it from Rightmove or the other sourcing websites, then you click on the Lendlord Deal Analyzer Chrome extension. Just need to decide which strategy you want to analyze, buy to let, flip, or BRR. And then it will take you to your Lendlord account, and Lendlord will extract all the information from Rightmove. So you can see here the purchase price, number of bedrooms, the property type, the tenure, and we'll also, using AI, estimate if I would select BRR, the potential refurb that you need to put in terms of budget to this property, and the GDV as well. And you can see all the metrics, how much cash you need to put in, what would be your net annual cash flow. And of course, as Jamie spoke about long term, so important, the best case scenario, the worst case scenario, and the default scenario for the long term for your investment. We will do now, like very shortly, a live example with Jamie. You can also use the Lendlord AI in unlimited capacity on the Premium Plus, and with some capacity, I think 50 messages a month on the Premium. And Lendlord AI will allow you to summarize deals, summarize listings, summarize your portfolio, and you can ask follow-up questions. It's like ChatGPT, but integrated to the property market, property data insights. So it's very valuable. You can also, if you use this, add web data and then ask question, it will go and search more resources from the web. For instance, if you want to compare prices in this area and ask questions about a specific postcode, this is something that you can do. Another feature of the premium plan is the postcode insights. So in the postcode insights, you can get, I need the full postcode here. You can get insights about the property area. We will use it when we do the live example. A statistic about demographics, crime, essential data when you analyze deals. We have the managed section, but perhaps we'll do it after that. And Jamie, you mentioned finance. We are running now a promotion by the end of September. So if you apply for bridging finance, you will get it with free valuation. So it's almost £500 discount on any bridging deal. If you are on a premium plan, you also get £150 discount on the admin fee. So, and we will go up to 90% of the purchase price based on the market value. So if you were able to purchase a property under market value, we will go with the market value at 75% gross LTV, but we can go and we'll cap it at 90% of the purchase price. So we want to see that you also put some money in. But I think it's very attractive offer. So you can go to the finance tab on Lendlord, bridging finance, and apply for finance. It can be either bridging or mortgage, where we are connected to a live feed, so you can see all the mortgage products that are now available based on different parameters that you can change here. If you manage your portfolio landlord, you can go from the property. So you can see all the rates, the fees, and more. So just to summarize, if you want to upgrade, go to your settings page or click on the link that I shared in the chat, click upgrade, then enter Jamie09, click apply, and you will get the discount. All right, so now Jamie, let's analyze. I think like we can do the BRR deal that you just mentioned. We can use random numbers, or if you want to share numbers, I think it's also should be helpful. By the way, if you have questions on the chat, we will answer in the end, or we'll do a break for questions in the meantime, in the middle. So let's speak about BRR. So you explain BRR, you purchase the property, usually unmodernized, so you need to do some refurbishment in order to improve the value. Then you need to purchase it either by cash or with bridging finance. Then you perform the renovation, refurbishment, and then you refinance at a higher value. So after you improve the value of the property, and then by the refinancing, you can actually get some money back. And we measure the metric called money left in the deal. So Jamie, let's start. Do we want to put an address or just like a random one or
Yeah, no, we can use a real deal.
okay?
Uh, so the address is 86 Church Street,
Church with you, yeah. Church,
Street,
yeah.
which is in Barnsley. So the postcode is S714QZ. There you go.
This one, yeah.
Yeah,
All right. And so an analysis strategy, I will choose BRR.
yeah.
The purchase price, by the way, you can use the get estimation. You want to, we can do this, by the way, if you want, then because it will also calculate the GDV and the rentals. Let's try, let's see, and then we'll see what you paid.
Yeah. So it's a house,
A
so
detached house.
terrace property.
Mm-hmm.
Uh, it is yeah, 1914 to 2000s, and it is a two-bedroom property.
The internal area makes sense, 87 square meters.
Yeah, sounds about right. I'll see if
So,
I've got any
Jamie,
details.
you improved the like you have not increased the size of the property, or you added bedrooms or something like that?
No,
No. Okay.
keeping it the same size.
Bathrooms, one.
Let me double check. Yep, one bathroom.
Internal finish quality, what was before and after?
Poor, or below average, or
Okay.
yeah, below average.
All right. And you took it to very high?
No, I'd probably say high.
All right. Outdoor spaces, balcony or garden.
Yeah, back garden.
Okay. And off-street parking.
Let me check. No.
Okay. Now I click estimate, and we should get the property value before, the property value after, the rental income before, the rental income after. I don't know if it's near your numbers. By the way, this is, of course, it's just an indication based on several parameters based off of the postcode, recent data and statistics. What do you think about the numbers? Make sense?
Uh, yeah, I think the difficulty, of course, with a computer is what means below average and what means high.
Yeah.
So for example, very high might be more applicable because it might be right, that is meeting the highest value in the area, but that really depends. But yeah, so it'll be interesting if you put a re-estimate and see if it changes the property value at the end. Um, let's see.
Let's see. And it also might be like more conservative. So before it's like still 100 and 720. Um, of course, there are parameters that it doesn't take into account, negotiation,
Yeah.
So you got 10K more.
Yeah, that's about right.
Okay, so I click on copy the analysis. If you want to change to the real purchase price and the real refinance value, we can change it now, or we should keep it, or we can keep it like this.
Yeah, so purchase price is 92,500. I've got it at
All right, refurb costs.
15,000.
Okay. And the GDV after refurb property value or like the
Yeah,
refinance.
that's probably about right. 130 to 135, I would say.
Yeah, let's put one. Let's be optimistic. And the rental income
The
after
rent is
refurb. Hmm?
pretty close. I said 775.
All right. Okay. Then did you use bridging or cash to purchase?
We're probably going to use bridging.
Bridging. Okay. And the refinance will be for a buy-to-let long-term mortgage. Yeah.
Correct.
Okay. Now I click proceed. And then, so first you have the sliders. So we can play now if you want to optimize the price you want to offer, or if you want to play with the refurb costs. But here are the results. So first, the refurb project metrics, the total cash investment, if you use bridging, so you need funds for the bridging deposit, stamp duty, closing costs, and refurb costs and bridging fees. If you go to the summary, you can actually update all of those details. Okay, so you can be more detailed in terms of the closing costs. If you needed to pay an agent fee or sourcing fee or any other fee.
Mhm.
Um, and you can also play with the project length. How much time it took you to complete the refurb? Because this will definitely impact the numbers.
Yeah. Well, this is one I'm buying.
This is,
Uh,
okay, okay. I thought that
this
it's,
this this one I literally got this agreed
what is the plan? Six
at
months, 9 months,
6 p.m. It'll be 6 months.
6 months. Okay.
6 months.
Um, okay, this is quite standard. The finance, let's click save. Um, all right. So the initial case investment will be around 47K. So, to pay the deposit, the refurbs, and all the other costs associated with the purchase. Then once you refinance, and then we'll go again to the summary. So you see the let period refinancing.
Mhm.
Um, Based on 75% LTV and 135K value, you would be able to raise 101, 250. And this, which means that the money left in the deal will be only 21K. Jamie, do you want us to explain the money left in, because it's a very important metric. So you initially invested 47, but in total, in the end, you would be investing only 22-ish.
Yeah. So the cool thing about when you're doing a BRR is you're pushing up the value of the property. And there's two ways of looking at that. One way is you are doing a refurbishment and pushing up the value, or you just have to accept the value you're buying at is what it's worth today, because most people that are buying this property to do this level of refurbishment, they are going to be likely investors. So then when you refinance, the best way of thinking about it is it's replacing debt. So if it's at 75% loan to value, which is about 100 grand or 101 that's coming out from 75% of 135,000, what will then happen is that will pay off your old debt or your bridging, if you like,
Yeah.
which was that 70 grand. And then what money you've left in is what's left. So I would have put in bridging plus all of my cash around 123,000. But now because 101,000's paid off the old bridge in, I've only got £21,811 left in. Now, what's really important is if it's worth 135,000, I've also added a load of equity
Yeah.
in that as well. So that's a really key piece that you need to bear in mind as well.
Yeah,
So
we'll go to the long term in a second. I just want to see, like, if you play with the sliders, let's say, Jamie, that the value, I don't know, the market will go up by, like, I don't know, who knows, but just like to test it, okay? So you can see that if we increase the value after refurb, you can see that less and less money would left in the deal. Um, there are, I think there are rare cases that you will be also getting money back, but this is like you need to increase it dramatically. And then you can play with each of the numbers. Let's say that it will be only 130, and you will be able to purchase only in 100. Then you say it's a bit squeezing, but I don't know if this is what you need just to look at, because then you have the annual cash flow and the property appreciation, which is the long term. So let me just bring it back to the around the numbers that we started with. And let's speak about the long term.
yeah, so one of the biggest things when you're investing in properties, yes, it's going to make some cash flow. It might make me three and a half, 4 grand a year, which is great. But the real thing that I think of is the IRR. And most people in property would never even have heard of the IRR, which is the internal rate of return. Now, the internal rate of return as a calculation is really complex and everything like that. But in general, it's your leveraged money long-term return, which is taking account of your cash flow and your capital growth. And a lot of people that invest in property, they go, "Oh, no, never, I never look at capital growth." It's like, why? Each area is completely different with capital growth. So I might do things a little bit differently. But first of all, inflation, I actually always put to zero. And the reason I put inflation to zero isn't that inflation doesn't exist, but inflation only matters so you can look at what's known as the real return, but it doesn't mean anything. Like if the value of a pound is 10% lower last year, it doesn't change what the return is on this investment compared to other people. So I know in this area that I'll be getting about average 5% capital growth year on year. So I'd change that to five. Occupancy rate is 95% is fine. And occupancy rate is how much of the year do I believe on average is this property going to be rented out?
Yeah.
To only get paid. And then rental appreciation is typically between 3 and 8%, but I just put 3% just so I can be conservative on that. And then you can see my IRR is 29.64%. So the way to think of that is
One second, Jamie. It's like I think important just to mention, because we did BRR, the IRR is so high. On buy to let it will also be high, but a bit lower, because basically with BRR, like the amount of capital deployed
yeah.
be lower because
Yes,
of the, yeah.
so buy to let, you'll still have like a IRR in a good area of like 12 to 14%,
Yeah,
which is
definitely, definitely.
an insanely good return, which is absolutely crazy. Like, where else can you safely, in a tangible asset, get 15% year on year returns? It's near impossible. So getting 29.64% is absolutely brilliant. So think of it, I call it combined returns, which is basically your rental income and your capital growth. So it's pretty crazy. And then honestly, the thing you then do is let time do its thing. Now, will the value of property go up every single year? No, you'll have years where it goes up and down, but it will average out at that. And then when you look 10 years on, you might have heard things where people go, property prices on average double every 10 years. It's not quite true. It's between 10 and 15 years, and obviously it's location dependent. But if you can look there in 2050, which is what, 25 years away, that property is going to be worth circa 500,000. And a lot of people find that really crazy to believe because if that is true, what I'm telling you is in 25 years, the average property price is going to be getting close to £1 million. And it will be. It absolutely will be. It's just so hard to comprehend, but it's what's happened for over 1,000 years. In 1954, I think, is the earliest registered property value, where the average property price was £1,900. And shock horror, if you double that, 2 grand, 4 grand, 8 grand, 16, 32, 64, 128, 256. So give or take, the average price today should be around 256. Well, you can look at the Office of National Statistics. The average property price is about 280 to 300 grand, dependent on the what source. And so it is weird to think that in 20, 25, 30 years, the property price average, not in London, in the UK, is going to be over £1 million. But you also have to factor in £1 million today versus £1 million in 25 years. It is also a different conversation. In the same way, if you had £1 million in the 1950s, you were an incredibly wealthy individual. So when you are investing, it's the IRR, which is the most significant number you need to be factoring in.
Now, Jamie, and when you analyze, you can also test the other scenarios, if you want just to be on the safe side. So
Yeah.
if we do like the worst case scenario, okay, what would be your metrics there? Occupancy rate 92% means like every year in the next 15 years, I'm now analyzing for 15 years, 1 month a year, the property will be vacant, no tenants inside. This is quite the worst case scenario in this area, I would say.
Yeah.
Okay.
Yeah, that's pretty extreme. If you're buying a property in a good area, like having 1 month every year vacancy is pretty crazy. But yeah, let's put it in. The good thing about playing out worst case scenarios is you can go, okay, if shit hits the fan, annual property appreciation, let's say, I mean, long term, maybe 3%. Um,
Three, it's worst case, you think?
Yeah,
Okay.
in this particular area. But
Okay.
yeah, it would depend on the thing. Like if you want to play it really, just put 1%, just really go crazy in it. Keep annual at 1%. And again, inflation, I would put as 0%. And I just want to reiterate, it's not that inflation doesn't matter. It just doesn't matter when I'm thinking about my investment decision. Because if I'm looking at investing in cryptocurrency or gold or another property or a stock market, inflation hurts every asset the same. And by the way, that's not true because we leverage, because we get mortgages. And when you're buying property, inflation's your friend because inflation, in short, is eroding the value of money, right? So if you borrow 100,000 and it cost you 5% to borrow it, so it costs you 5 grand in the year, but inflation is also 5%, then the value of that 100,000 is now a year from now the equivalent as 95 grand. And so inflation, if anything, in property is good. The higher the inflation, the better it is for you. Factually, actually, in property, it's one of the only asset classes you can leverage that safely as well. So yeah. So there we go. You play it out, and there's some pretty shitty predictions there. 1% rent increase, 1% capital growth, and you're still getting an 18.73% IRR.
Yeah. Because
I'm,
basically
I'm,
what
I'm
we,
okay with that.
yeah, because we measure it on the money left in the deal. Yeah. So again, I think in buy to let, perhaps you'll see lower numbers, which are still good. Um, yeah. And it also really depends on the location. Um, I believe that for sure the long term. I believe like properties in London, like you can see also some, areas with like the prices are declining right now. I
Hmm.
think in the north you would still see also in tough periods you can see increase. Um, yeah, so I think definitely the worst case scenario is important to test and to measure and to see in this scenario what would be. And you can also use a best case scenario. Let's say 98% occupancy rate, 7% property appreciation. I don't know if you want even to put higher numbers, we can, and then you can see where it goes. Um, yeah, and also you mentioned the equity element that I think this is something that the way I look at it, this is the option for you to leverage and grow your portfolio at some points during the years.
Yeah.
So based on the property, so what happens basically, if you are on a fixed like interest only mortgage product, then you can see here in the chart that the mortgage balance will remain the same, but the property value is going up. Then basically the LTV is going down. So if you're on a fixed period, or even if you are like on tracker product, then you have the points you can remortgage, refinance again when the value has increased. And then basically you can get more money back and use it for more investments. So this is also something that a property appreciation, um, you know, can help you to grow your portfolio. So it's another thing that you need to think about the equity you have in your properties and what this equity will be in 15 years or in 5 years or in 10 years.
Well, it's interesting this because we were actually talking about this yesterday, me and my business partner Dan, where like people selling their buy-to-let properties and portfolios and stuff like that. Like it's hard to think of a situation apart from a personal financial situation where it would make logical sense to sell it. And let me explain this. So, first of all, everyone's clear on what equity is, right? So let me know in the chat if you don't know what equity is, and I'll explain it. But in short, it's the value of the property that is yours. Because obviously, if I own a £200,000 property and I've got 75% loan to value, that means 150,000 of it is debt, like the lender, right? So 50 grand of it is my money or my equity, if you like. So the cool thing about capital growth is your net worth is increasing year on year. And here's the big thing, tax free. So let's say the property goes up £100,000 in value, just as an example. You've got that 100K. And here's the thing that always baffles me if somebody sells it. Well, if you sell it on that 100K, you're going to pay tax on it, right? So more than likely, if you've got it in a limited company, corporation tax, it depends on how much you're earning, but you're going to pay 19 to 25% corporation tax on it. Okay. Or you're going to pay capital gains tax if it's in your personal name. But let's say it's 19 to 25 just to keep it nice and simple. So let's call it 20%. So that means if I sold it, that 100 grand, nice little pocket money I've got is now £80,000. And of course, you're going to have sales costs of a few grand as well. So let's say you end up with 76, 77 grand extra in your bank. Now, you might go that, yeah, but I need that money for something else. But here's the thing that's crazy, right? Or I could refinance it at 75% loan to value. And what that means is that 75%, 75,000 is now going to be in my bank account. So if I sell it after tax, I might have 78 grand in my bank, or I refinance it and I have 75,000. On top of that, in the time the rent has gone up, so the rental will more than cover the increased 75,000 debt in terms of the interest payments and some, okay, and some, and you still own the asset. It's like having a cow and saying, I need some milk. So what I'm going to do is I'm going to sell the cow for 100 pints of milk. But you've got a bloody cow that milks 75 pints a week. Like, why would you ever sell the cow? Right. And this is the crazy thing that, like, once you are on the buy to let ladder, wealth is a different game. And compounding really has an impact. And genuinely, I just want to really reinforce that everyone should be on this ladder. You know, I've been on it for 10 years now. And genuinely, we started from 33 grand in debt and we're now at a 25 million pound portfolio. And last night we were at dinner going, I'm 33 now. And I said to Dan, my business partner, okay, let's map out If we wanted a 100 million pound portfolio before we hit 36, so 2.5 years, how would we do it? And we didn't quite figure it out. We got to about 80 million. And it's like, right, I'm still going to put my mind to it. Where else could you build your wealth that quickly? And all you need to do is great marketing to attract the right people with the right motivations and use bridge to let products. And that's it.
Amazing. Yeah. And you can manage your portfolio on Lendlord as well. We'll show it after that on my portfolio. Jamie, one more thing I want to actually two quick things. One is the comparables when you analyze deals. So we have this feature. It's available for premium users only, but you have the coupon code by the coupon is available by this webinar time. So if you want to get it, just enter Jamie09 and click apply, and you will get the premium plan for 49.5 or the premium plus for 149.5 for the first year. Yeah, hurry up because this is available during the webinar time only. So comparables, if you let me switch to a different account. Not I will use it in a different deal. 1 second. So you can see recent sold prices in this area. And this, I think this is quite valuable. You have it also in this tab, the comparables, and here you can click and see the link on the Google Maps. And here you can get more information about the property that was sold. And the second thing is the postcode insights. Postcode insights, it's again part of our premium plan. Let me just add this postcode. Jamie, do you have any postcode in your head that you can give me just for this example?
Well, any postcode at all?
Yeah.
LS42JU.
So
LS42JU.
LS4,
Yeah. 2 Juliet uniform.
this one?
Yep.
Okay. All right. So instantly on the postcode insights tab, and it's also available here from the menu, postcode insights, you will start receiving the area facts and statistics. And there are some things that we've added because of Jamie, not because, Jamie, your tip. So household income, if you remember in one of our webinars, you mentioned
I
that
do.
have it. Yeah, we also have the average price per square foot, the area type, how many days an average property will be on market. And important, you can see the capital growth. You know this postcode, I believe, Jamie. So I think this is in the north, no? Because as I mentioned, like in London, you will see many, not many, but I think you will see some negative growth in some years. But here you can actually see that it's emphasized if you go back. So not every year would be 5%, okay? But there are years that I see 7.8. And yeah, there are some years with 2.5 or even 0.9. But the average, so I think that we put 5% in our average on the default scenario.
Yeah.
This is basically support the analysis that we did. Then you have the rental stats about rental income based on property types in this area. You can see the average asking prices in this area. So what people actually ask for the properties doesn't mean that it will sell at this price. The comparables in a different view, the council tax costs, local crime, uh, elections, schools in this area, commute method, and age distribution. Jamie, what do you have to say about postcode insights and what basically you are looking at when you analyze deals?
So first thing I'm looking at is tenure of property. So the tenure of property is like the ownership in the area. And that's really important for me is, the average in the UK is 60% of the UK own properties to live in. Roughly 50-50, more 50% mortgages, 50% there. I like looking at crime rate in the area as well. Just look at the crime. One thing I will tell you is crime is everywhere. And I know the first thing that people do when you look at crime rate is search your own postcode. And it's really important that you know that your area also has crime on there. So it doesn't matter if it's medium crime or high crime, to be fair, but if it's very high crime, that's going to be a problem.
Yeah.
The next thing I like looking at is schools. Schools, has it got good or outstanding schools? And that's really, really important for me. It's like, has it got good or outstanding schools in the local area? Ideally, it's got a minimum of two, as you can see there, quite a lot. Uh, Good or outstanding schools, which is good. I'll look at the age, and the age really gives me an idea um, of what we're looking at because I want to see an area that young to middle age is perfect because it shows an age group that's going to be there and want to live there and continue to be there. And then Avi mentioned the household income, which
By
is
the way, Jamie, in terms of the age, like this area has students and or trying to understand why there is a peak at the age of 20 to 24. But
yeah, so it's actually just outside of a student area, this particular one. So this is an area called Kirkstall in Leeds.
mhm,
And it's down the road from a place called Headingley, which is the student area.
mhm,
And so typically what you have is like master students, especially people that are students but don't want to be in the thick of the undergrad students, that sort of thing,
yeah,
which is important. And then the final thing that I like to look at, as I mentioned to Avi, which is put on, which is great, is household income. And the reason for household income is it really gives you an idea of the purchase price versus the household income. So average in this area might be like 150, 160,000 for a property, which is only 5 times the average household income, or 4 to 5 times. Whereas obviously in London, it's more like 8 to 10 times. And the reason that's so important, by the way, is it's not everything, but what it shows you is that the value of the property as it grows, it's very unlikely it's going to be limited by an affordability point of view. So, factually, if you have areas of the UK where the average is 8 to 10 times a household income, which London especially is, and Kent and surrounding areas, then it shows you an affordability metric. That doesn't mean suddenly the property could double in value next year. That's not going to happen. But what you want to be looking for is what could slow down the capital growth of a property. And one of the big ones is affordability. And so that household income, if it is around that 4 to 6 times area, is a real nice sweet spot.
good. And there is a question. I think we will go to the questions, but this is relevant from Chris. Is it worth driving around there? Like, actually, would you buy a property without going to the area or even inspecting the property? I think it's quite, I don't know. But the question, how much you need to know, you know what? You view the property, but you are far away from this property. So you live, I don't know, hours of driving from this property. You don't know the area because you didn't live there. Is it still something that you would buy?
So yes. So here's what I will say is I I actually don't um I actually don't do that myself. So but buying properties is it's not an emotional thing. So, for example, the ones that I'm buying myself, I'm not going to view them. So, what I do, and we've improved this process over the years. So, our processes now are really, really important and very different to even a couple of years ago. Like the way we do things now, we've learned so much and improved. And so, for us, when a property needs a refurbishment, like the one that I've just mentioned, it's I'm going to send my builder around, and my builder will go round and price up the refurbishment. And then so I trust that builder. Now, it is worth saying it's also taken me time to be able to find builders that I trust, obviously, in order to do that. So mentioning about going around and doing that, I think that is something that's really powerful and important. But when you're at the beginning of your journey, yes, going to an area is good. Yes, getting a gut feeling, but honestly, it's actually just to build your power team. So you go in, I don't know the area. So let's explore that statement a little bit. When you say I don't know the area, you do. You don't need to physically go to an area to know the area. When people say I don't know the area, what they mean is I've never walked down the street of an area. Great. Go on Google Maps, drop the little avatar, and you can have a nice little walk down the street. There you go. You can do exactly that. Now, I do get it, what you mean. You know, like you go to some areas and you have a feeling, like a feeling or something. I get that, but property is not emotion. I can look at the crime rate online, not by walking around. I can look at the poverty in an area by going online. I can look at the growth rate in the area. Like I can't walk around the road.
You meant on your landlord account, Jamie.
Yeah, well, that's it. It's like you go to like the landlord. Now, look, let's be open. This information you can pay for access in a lot of different places. The thing that I love about Lendlord is they've paid the money to bring it into one place. Like property data, as a prime example. I think property data is great, but you'll pay 30 quid a month to get access to half of the information. The thing that I love with Lendlord is it costs 100 quid a year, or for you guys on here, 50 quid for a year, and you're getting all of that information in one place. So it's data and information. And I would actually argue against going to an area a lot of the time. I think it's an incredible waste of time, and I think it's really an opportunity to get emotional about the purchase you're making. So in general, if the property needs work, I am not the builder. I am going to send a builder that I know, like, and trust. And I fully get that if you don't know that, you need to build those relationships. And if I'm looking at videos of the property and I'm like, it looks ready to let, then I'm going to send a letting agent round so they can look over it from a maintenance and compliance point of view, and they can tell me what needs to be spent on it from that. So a very like pie in the sky thing that I do is I look at a video and a picture and the pictures and I go, do I believe that needs less than £5,000 spent on it or more than £5,000? And I know that's very rough pie in the sky, but what I'll do is I'll put my offer in based on the videos and the pictures, and then I will send over the letting agent or the builder to price up properly.
By the way, we just released a feature. So if you source properties on Landlord, this is a new view, by the way. You can now click on contact the agent. You can see the details, but you can also send an email from Landlord, which we phrased, but you can use also the Landlord AI to rephrase this email. You can, like ChatGPT, you can put some like instructions and get the text that you want to send. You can send an email to the agent and get more information about this property, or even start the bidding process. This is also part of the premium plan, which you can get with 50% off during this webinar time. All right, so let's go. Let's take some questions. You have more time, Jamie.
Yeah, I'm all good.
All right, okay. Perhaps just before, I just want briefly to go on the manage section. So on Lendlord, you can also manage your existing portfolio. It's a very enhanced module. We store more than 150 different data items on each property. So just imagine that you need to share this information with someone. You have everything in one place. There are no mandatory fields, so you can just start with adding few details and then tweak it and enhance the data afterwards. If you maintain a spreadsheet, you can upload it to Lendlord following these instructions. You can get tasks, so any due date that you put in on my portfolio, you will get a task and a notification before you need to do something. My documents, I think this is essential module because here you can store all the documents that you need to keep for each property. You can also upload common files, anything you want. And also for each owner, for each company that you manage properties, or even for each tenant. So you can store your documents. We have a search now, so you can search documents, and you can share documents with only one click with others. And the new thing, and it's part of our PIM plan, you can send documents for signature. So this is something like you use DocuSign, now you can use Lendlord on the premium plan to send any document. We started this with the tenancy agreement, so you can send it to your tenants to sign electronically. But basically, you can use any document, and you just need to place the signatures, the date, click send, verify the email address, and then the signer will receive an email with a link to sign electronically. You can also manage your tenants and tenancies on Lendlord. You can generate tenancy agreements and send them for signature. So if you, for instance, manage your prospect tenants on Lendlord, you can, and you agree with one of them, then you can generate the agreement. It's customable, so you can actually change the sections of the agreement or add sections. And then in one click, so here is the sections management. You can change the text if you want, and then send it for signing. And then we have the maintenance reports. You can invite your tenants to their own dashboard, so you can share the payment schedule with them, and they will get notifications to pay rents, and they can also report maintenance issues, which you can reply from either from our mobile app or from your desktop version. You can link your bank accounts to Lendlord and manage your cash flow over time. Everything is available. If you want the entire functionality, you should upgrade to the premium plan. We have this chat box, so you can message the team. You have many tutorials. If you click on the help icon here, so you have articles on how to get started on the invest part, the manage part, the finance part, and you can also message the team. If you are on premium plan, you can schedule demos with our team as well. All right. And just if you still want to upgrade to premium during this webinar time, we offer 50% off. I will put the link again in the chat, but you can go to the right top menu, click settings, then click upgrade on the plan details. Enter the coupon Jamie09 and click apply coupon, and you will get the premium with 49.5 premium plus with 149.5 for the entire year, for the first year. Very valuable. So this is available during this webinar time. And now let's take some questions. So I will scroll up to the beginning of the chat, Jamie, and let's take some questions. And if someone wants to ask a question, you can also raise the hand, and perhaps you can open the mic. Let me see. 1 second. You can also now write questions on the chat. Are you doing anything with AI? Yeah, I think this is a thing for Lendlord, definitely. There are many areas in the system that we use AI, but you can also use Lendlord AI. You can even, get insights about your cash flow. On the listing pages, you can analyze any listing with Lendlord AI. We are now working on a new feature. So amazing the walks plan, schedule of walks with AI. So yeah, definitely AI is embedded into Lendlord, and you have Lendlord AI as an assistant. Let's continue. How much can I borrow on a 400K unencumbered HMO property, no PGs? This is for the hosted panelists, so we will answer it in a separate way. Basically, like if you speak about landlord bridging finance, we do up to 75%, but if the market value is above the purchase price, we can go up to 90% of the purchase price. Yeah. As a newbie, my issue is purchasing a property being below market value to BRR and then buy to let. They are expensive, and following refurb GTV is not a lot to refinance. I don't feel like you already saw this question and answered there, Jamie, but I think this is the challenge with EBR. You actually need to improve the property from the price you purchased it.
Yeah, I think when you're looking at BRR, it is the hard thing because a lot of people get obsessed with BRR, like I'm going to pull my money out, and it's just not going to happen. Like people come to me because I build portfolios for people, and I've been learning more and more and doing that and improving on that. But so I talk to some people, go, yeah, I want to find a BRR and pull all of my money out in 6 months. And I'm like, well, where did you hear about? Oh, I went on a course last week that told me I can do it. And I always say to people, I was like, right, think logically about that from two angles. Number one, would I ever need to sell a deal? Think logically. If I could get all of my money out from every single deal that I did, would I ever need clients? No. Or even if I didn't want to build my portfolio, it would be in my interest to do that for my clients, wouldn't I? Because if I could do that all the time, then a client comes to me with 100,000 and I just keep using them again and again and again and again, right? So it would be good business for me to find clients and do that. But it just doesn't happen like that. So in general, you are going to be leaving in some cash. You're going to be leaving in cash, and getting good BRRs is not easy to find. Otherwise, everyone would be doing it. So when you're looking at a property and you're going, the end value for me means it is not good enough as a BRR. Fine. Then you need to get better at marketing to attract better people, and you need to get better at negotiating. Those are the two skills that you need to develop in order to get better and better deals. The more you do as marketing, the more leads you will get through, the more conversations, and the better you get with negotiations, the more deals you'll get. But it is a sales system, skill development, and numbers game. When you've got the right sales and marketing system, you develop your skills to the highest level, and you maximize the volume of conversations that you're having, then you will make more money. Okay, so you have to develop that skill set, but nobody said this was easy. Getting great deals is not a simple thing. It takes a lot of time, patience, skill that you need to develop.
Great, thanks, Jamie. I have a question to Landlord. How to send the whole portfolio data to someone else? Very easy. Just go to the My Portfolio page after you have all the information and click on the Export button here, and it will export the current view. You can manage your views, so you can actually decide which fields you want to see. I love the equity view, so you can see on each property how much equity you currently have and what is the current loan to value. So yeah, in one click, you can export the data. It took I will go to the bottom now. What's the biggest Dale? Hey Dale, what's up? It's Dale for Fabric. Good guy. What's the biggest challenge with people adopting such prop tech and AI right now with just systems like Lendlord? Okay. I think I need to say something about AI because people I did. Yeah, well, thank you. So Jamie, tell me what you think. But basically now with the involvement of AI, what happens that you can spend more time on making decisions rather than gathering all the information. And with tools like Lendlord and others, in a few clicks, you can get all the information or so much information about the property, about the areas. We just showed you how much statistic you can see on the postcode, and then you can also apply Landlord AI and ask questions and add the web data. So Landlord AI will search for you for more information about properties like this and about the area. So everything is much quicker. So for me, how I look at it is instead of analyzing 5 deals, now perhaps you can analyze 20 deals. So you have more options to decide. You can compare more properties and then perhaps get much better option. So I think for sure people and landlords for sure like needs to adopt digital tools, needs to adopt AI. There are also some reforms in the Making Tax Digital. We had a webinar. You can see it on our YouTube channel that should come in the next few years. It's always been delayed, so I don't know when, but also the government understands that people needs to work with softwares and start to even report the tax returns in a digital way. So yeah, I hope I answered. Jamie, how do you see that? Because you partnered with us because of technology and like even back then, 3 4 years ago, you realized like what the future is and why we need technology. How do you see it like these days?
Uh, I think if you're not embracing technology, especially in investment types that are more archaic, and what I mean by that is property is so old school, right? It's so old school, but the everything surrounding the property is ripe for reinvention. So, for example, buying property in the UK is one of the worst purchasing processes in the world for buying property. It's terrible. Whereas new age countries like Dubai, for example, or the UAE, I can view a property this morning, press a couple of buttons, sign something, and I can own it this afternoon. The downside of the Dubai market is it has no history, so no real relevance. There's no predictability. And so it's all hype, right? The good thing about investing in the UK is it's got 1,000 years of evidence, and there's not many countries in the world, barely any, where you've got 1,000 years in evidence. The downside is the systems feel like 1,000 years old as well. So why does AI matter so much? AI will not replace the investment zone. AI will not replace you. However, if you, as an investor, with your human behavior and your psychological approach to investment, do not embrace AI, maybe not today, but in a year, 2 years, you're going to be left behind. And the reason for that is we are going to, as investors, be able to make decisions so fast and be able to get access to data so fast. And the legal process will move so quickly that you're going to be left behind. So with Lendlord, I'll be honest, Lendlord today or not using Lendlord today, the difference is speed, access to information in one place, and your ability to get what I would class superior lending. So I would say that your experience investing without Lendlord is like a 5 out of 10, and investing with Lendlord is like a 7 or 8 out of 10. If I'm really honest, what I'm excited about with Lendlord is where is it going to be in a year or two? And that's the real game changer. So, what I like the idea of it is uploading my entire portfolio to Lendlord, syncing all of my bank feeds so that it's rental, all of that. And it's all of that background data on me and my portfolio. Now, that might sound really scary, but I'm telling you, I don't know whether it'll be a year, 2 years, 5 years. I will be able to type in some data on Lendlord. It will scour the entire market of the UK, and based on predictability, it will tell me where are the most likely offers that are going to get accepted below market value. I'll be able to reach out with a button. I'll be able to submit offers, get lending, legals, all at the click of a button. And it's because of the data and fast and powerful decision making that the AI will be able to make. And I am telling you right now that legal decisions, finance decisions, predictive returns will all be done through AI with final verification by a human being within about a year or two. And I want to be a part of that platform where I can just click a button. I genuinely believe Lendlord will be like Hargreaves Lansdown for property. That is how I think of Lendlord. It's like having a stockbroker app like Hargreaves Lansdown or Trading 212 or whatever it is. And I'll be able to click on a property and go purchase. And I will be able to tell it the price that I'm willing to purchase at. And I reckon Lendlord will be able to submit that offer with proof of lending, proof of funds, proof of solicitors, all in one. And the vendor will be able to accept it and it will all be wrapped up and I'll own it in a week. That is my prediction of the property market with Lendlord in the next 2 to 5 years. So that's why I think everyone needs to be embracing this. And honestly, I say this to Avi every single time. He needs to increase his fucking prices. And like it's such a stupidly low price. It is literally like 5 or 6 platforms that I before Lendlord was paying 30 to 50 pounds a month on, and now you can access it all for 50 pounds a year. Um, I don't know what people would expect. Like it's absolutely ridiculous. I don't know why, because Avi's looking to scale the data and makes money because they're the bridging company, right? So they'll make money by you using their money. But that's great. But everything else for 50 quid a year is ridiculous. So yeah, that's my prediction. I think it's very exciting and I think it's going to be a game changer.
Yeah, I agree with you 100% on the future of AI in the property area, and like this is our vision as well. And yeah, we want, like the technology to be accessible to any landlord. Because of that, the price is not high. And we have now also the Premium Plus if you want to do more. I will share again the instructions how you can upgrade to Premium Auto Premium Plus with 50% off. We had some questions about Scotland. I think we should like we have several properties on sourcing. You can analyze these in Scotland. You can manage your portfolio in Scotland. In terms of lending, unfortunately, we currently don't support Scotland. I think in bridging, in mortgages, I think we do have options, but we will be there hopefully. There was question about, sorry, I'm not sure that we will be able to answer all questions, but Jamie will tell you in a sec how you can reach out to him or like the team at Aspire. And of course, with Lendlord, you can always approach us with the chat box. So you can message us and the team will answer. You can also get more help with the help center. So there was one question about tenants and how you can message tenants, or you can log the maintenance issues because they want. So if you go to the manage section on the maintenance reports, so we've added now, it was not available, but now it's available, the add report button. So basically, not just the tenant can report issues, but also you can, as a landlord, to do it now. And you can put the description, you can upload photos, and you can start a new incident. And also your tenant will receive a message. So you can get replies, and on any reply, you will also receive a notification. So we do have many users that actually manage their tenants on Landlord, but we also have many users that use the property manager, letting agent. But then again, the my portfolio module is important. The cash flow, even if you use a property manager, and of course the invest section. I also remind you about the promotion for bridging, free valuation for bridging finance. I think there was like question about bridging. I think it's important to understand that bridging is basically a great tool, but you need to be very planned in the way you manage the projects. What is your are your thoughts about bridging finance, Jamie?
From what aspect? Like a risk versus reward or?
Like like if you need to purchase in cash or bridging, I will tell you why I'm asking. Because in bridging, I think if you have a good plan and you know that you are going to exit on time or around the end term of the loan, then it's a great tool, because even if you improve the valuation, then you can refinance at a higher value.
Yeah, so bridging, I would say if I were doing a BRR, I would say at least 90% of the situations I would be buying with bridging over cash. And the reason is, why would I want to use my own money? Rather use somebody else's money. Yes, I'm going to pay a small amount in interest, but you only intend to use it for like 6 months to 9 months, a majority of the time. And so the cost is relatively small in the grand scheme of things. And also, it depends on what level of cash you've got, but it also allows me to access other deals. Now, let's say I've got 200,000, which is a good amount of money, of course. But what I would be wanting to do is maybe use that to buy 4 properties, 5 properties with bridging and a bit of cash versus buying 1 or 2 properties. And so with that, yes, I'm going to have some cost implications. So it is going to cost me doing that versus cash. But is it? Because by the time I get the deals, let's say I buy, let's say I could buy one, 200K all in, or I could buy 4 with 50K all in, just as an example. Now you might go, yeah, but those 4 cost you £5,000 each in interest loans. So that's £20,000 worth of cost. Okay, well, that's not ideal, is it? But let's say then on refinance, what you've got from those deals is you've now got 4 properties that you are now, let's say your average property price is 150 grand. And so that 150,000, each property, you've got 4 of those, remember, if it goes up by 5% that year, that is £30,000, because 4 times 150 grand, that's £600,000 worth of properties. So that's £30,000 in capital growth, which is 2,500 a year, a month, sorry. So already just in capital growth, that 20,000 that it's cost me, that takes 8 months of capital growth to repay that. And I've got 4 properties instead of 1. But then on top of that, you've got cash flow. So let's say you're making 250 quid a month cash flow, just to be really conservative. But now I've got 4 times that. That's another £1,000 a month. So now instead of it taking 8 months to be in the same cash position, it's taken 6 months, maybe 5 months, and I own 4 properties instead of 1. So it depends. It depends if you're wanting to do nice and slow and simple. But if you want you to be aggressive, which in this market I definitely would be, I'd want to go all in and make it happen. Then the way to approach that is to use other people's money. So as long as you're planning it out properly, you're using professionals to get it done, and you work to time, which is important with bridging. You can't take a bridging loan out and just chill out for a couple of years. You want to get off it as fast as possible, onto a long-term mortgage product, then it's great.
Yeah, I agree 100%. All right, let's wrap up. I think if you want to invest in Landlord, let's speak. But for now, we're not raising funds. Question about premium, like if you're already on premium, you want to upgrade to premium plus or to use the coupon code, just if you can message your email address to the host and panelists, and we will take it from there. Yeah, so just to remind you, perhaps I will keep the session open after the webinar. If you still want to upgrade to premium, I will put again the instructions. So Jamie, let's summarize this webinar. I would, continue to speak with you like all night long. It's very interesting. It's always great to hear your thoughts. So any last words for the audience here? And you know what, perhaps also if you can share on the chat, if people want to approach you and the team at Aspire, um, if what is the best way to reach out, and also perhaps we can share your YouTube channel, which always have great content. I will share it.
I appreciate it. Yeah, if anyone wants to see the YouTube, it's just Jamie York. And for those of you that want to direct message me, ask any questions, anything like that, my Instagram's probably best, which is just Jamie York Official, and just make sure it's the one with the tick on it. I'm more than happy to help anyone in any way that I can. And then for those of you that, want to go down the education route or have a chat about building portfolios, you can just DM me on Insta. And I'll just do whatever I can to support you and add value there. Yeah, in signing off, I just think now is such a great time to be investing in property. I think it's a long-term approach, and you need to be focused on the long term of property, and you're not going to be perfect. I just want to be very clear. Even now, after 10 years, I still make mistakes.
Of
I
course.
still screw up every now and then, but you want to be utilizing great team and great software to support. And it's a really big reason why I love Lendlord, because from that service side of things, you've got the tech, but also the team. And we don't often talk about the team behind Lendlord, but like when you are ready to get like your lend and that, you can schedule a call when you've got your property. And honestly, they are probably the fastest team I've ever dealt with in my life. Like, it is absolutely phenomenal. And so, yeah, I think it's a no-brainer. I think obviously everyone on here is a at least a free user of Lendlord, but if you're not on premium, I think it's ridiculous. The only reason you wouldn't be on premium is if you legitimately have no intention of building a portfolio. Like that is the only reason I could think of, because there's obviously no reason to be on Lendlord if you're not building a portfolio. But if you're legitimately building a portfolio or even helping other people build a portfolio for 50 quid, you save more than that in your first transaction from being on premium. So it really is a stupid no-brainer. Like, I don't know when Avi will listen to me, but I'll tell him again, increase your prices. I don't know when he will, but genuinely, for the sake of 50 quid, I think honestly, can you even go out for lunch with somebody for 50 quid nowadays? I think it's a no-brainer. And yeah, I'm really appreciative of happily bumping into Lendlord many years ago. It really has changed the way that I approach investing property. And what's more important for me from a software point of view is how much feedback Avi and the team take on to improve the experience for us all. And that's something with the tech, the team, and the development and the ability to take on feedback quickly. I really think those that aren't on Lendlord, especially with the premium package stuff, is I really think you're going to be left behind. I really do. So yeah, if you're not on premium already, you should be jumping on that.
Absolutely. And thanks for the kind words, Jamie.
I
Uh,
should start getting paid for people doing premium. That's what I think. I think I should a kickback of the £50.
yeah, like I will send you a coffee from Starbucks every
Thank you.
time we get
It's
you.
very generous.
But yeah, of course. Like okay, so I will let's so yeah, thank you very much, Jamie. This one was actually really also valuable for me, like to hear your thoughts. And I think that, as you mentioned, I think buy to let is for the long term. Property is here to stay. Of course, there are many of things that can affect the market in the short term, but I think with tools like Lendlord, you can actually analyze for the long term and see each investment if it works for you, the numbers stack up or not. You know where you can find us now. You know how where you can find Jamie. We will see you in the next webinar. So thanks everyone for joining. Thanks for your time. Thanks, Jamie. And I will keep this session open for a while if you still want to upgrade to premium, and I will share again the details. So, and also I shared the link tree of Lendlord if you scroll up on the chat. So if you want to schedule calls with our mortgage team, bridging team, or not sure if you have the demo there, but demo you can ask for as a premium plan on the chat. And you can also use the benefit of free valuation on bridging by the end of September. Thanks, everyone. Thanks, Jamie. Have a
Thanks,
good
everyone. See
day.
you later.
See you soon. Bye bye.